How am I going to finance my first flip without any money? What do people with little to no money do in order to get started in real estate investing? How am I supposed to get started if I can't qualify for a loan or I don't have proof of funds to lock up that next investment opportunity when it comes across my plate? See, these are some of the most common questions and concerns that I hear from people who want to break into the real estate investing space, but they feel like it's a lack of funding that actually holds them back from taking those next steps. Well, if you are one of those people, then sit tight, because in this short video, I'm going to go over 4 of the most common ways that you can finance your next investment opportunity when it comes across your plate. Now, if you don't know who I am, my name is Matt Aitchison. I'm a 7-figure real estate investor, millennial entrepreneur, and founder of the 6-Figure Flipper course and mastermind group. And over the years, after teaching and speaking in front of thousands of aspiring real estate investors, I've realized that this belief, a lack of funding, happens to be the #1 thing that holds people back from moving forward on flipping houses and buying investments for themselves. And to be honest, I shared with this same limiting belief when I was first starting out myself. And it really wasn't until after my first deal that I learned how simple this whole financing thing could be, and that I was actually the one who was overcomplicating things. And once I learned about some of these simple funding strategies, I was able to remove this mental roadblock from my thinking and actually focus on the fun stuff, which was taking action, hunting down more leads, building out my team and growing my network, and really just scaling my business, which ultimately led to me closing more deals and starting to see the checks roll in, which is why most of us get into this industry in the first place, right? And I'm sure you've heard this before, and I'm going to say it again because it really is true. If you find a great deal, and it's really just that, it's a great deal, it's got great profit margin in it, then you will never have to worry about finding the money for it, because the money will find the deal. And we're going to talk about some of the ways that you can structure your financing to ensure that that happens for you too. So without further ado, let's dive in and review the 4 most common ways that you can fund your next investment opportunity or flip. The first option that you can use to fund your deals is by finding partners, or what is commonly known as in the investing world as joint venturing. Now, if you're just starting out and you have found a great opportunity, partnering up on a deal with another local investor or money source is a great way for anyone that doesn't have a whole lot of cash, or really any cash at all to bring to the table, to get their deal financed. Now, this is really how many investors get started, and there's actually many benefits to it as well. Recently, one of our students inside the 6-Figure Flipper Mastermind came across a great deal. The numbers looked awesome, but he had very little money to his name, so he wasn't really sure how he was going to capitalize on this opportunity, and really he was stressing about missing it. If you were to look at him on paper, he had bad credit, some debt, not a lot of cash in the bank, not a ton of experience, but he was great at networking and building relationships, always had a positive attitude, and he had put in the work and planned and prepared for this opportunity. Most would think, hey, there's no way that he's going to be able to put the deal together and find financing for it. So what did he do? Well, he tapped into his local network, found an investor that he had been building a relationship with, and he showed him this deal and how great of an opportunity it was. And he negotiated a joint venture that allowed him to stay in the deal, learn, and he got to share 50% of the profits without having to qualify with a bank or bringing any money to the table. Now, that is what you call a win-win, and is an awesome, awesome case study. And he ended up making $27,000, and in the process, he got to manage the rehab and strengthen his relationship with that investor for future deals. Now, the student got some great experience and he made some money, and the investor had a deal delivered to him on a silver platter, and they were able to get 50% of the profits of that deal, which was an opportunity that they wouldn't have had otherwise. This is an example of an ideal way to use joint venturing to fund your deals. Now, I do want to highlight real quick that not all partnership structures will be like this, right? Your partner may not be a mentor or may not have experience as a real estate investor or flipper, and they may just want to invest in your project with their money and not necessarily their time. And that's totally fine. Just make sure that if you're just starting out, you want to take the time to discuss with someone who has experience in this space on how to structure your partnership, make sure the contracts and all the legalities are lined up, T's crossed, I's dotted, and make sure that that agreement in regards to the profit sharing is dialed in the way that you want it to be. So as you can see, partnerships can be a great way for funding your flips and other investment opportunities. Just be sure to cover all your bases before going down this path so you avoid any potential pitfalls that can accompany this financing strategy. The second option for financing your deals is with a hard money lender. Hard money lenders are a great option that many real estate investors use because of their looser lending guidelines, and they have an appetite for funding riskier opportunities like flips and short-term rentals where most traditional banks don't. Plus, hard money lenders usually put more weight on the deal itself than they do on the borrower, which is always a nice benefit for a new investor or less seasoned investor just starting out. However, there are a few things that you're going to want to keep in mind when considering using a hard money lender to fund your next deal that you'll want to take into account on the front end. Most hard money lenders are known for having higher interest rates that can range anywhere from 8 to as high as 12, 13%. Also, they have shorter loan windows which require you as the borrower to repay the loan much sooner, and those timeframes generally range from 6 to 24 months depending on the project, but still makes it very doable if you're doing an in and out flip or rehab project. And last, most hard money lenders have loan and underwriting fees that they attach to the deal, which can eat into your profit margin. So these are all the things that you're going to want to be aware of so you can account for those when you're borrowing and the timelines up front when you're evaluating your opportunity to ensure that the deal still makes sense. So when does it make sense to use a hard money lender? Well, based on what I just shared with you, as long as you know that you can flip the property quickly and you have all the fees accounted for up front in your analysis and the deal still meets your criteria, then hard money lenders are a great option to utilize based on their speed and their flexibility. Just make sure that you can get through the rehab quickly, you can get your property back on the market fast so you can sell it fast and get that lender paid back sooner rather than later so the financing costs or the borrowing costs don't eat into your actual profit margin. Basically, the quicker you repay the loan, the less interest you will have to pay and the more margin you as the investor have at the end of the project. The third option and my absolute favorite way of funding flips is with private lenders. Now, on paper, the definition of a private lender is a person who is not associated with any particular bank or institutional lender, and they are willing to invest on your project. So for example, let's say you got Uncle Bob, he's got $500,000 sitting in his savings account, and he wants to invest in something that is got a safe and fair return. That would be an ideal candidate to be your private lender and invest in one of your real estate flips or holds. So basically, a private lender is anyone with some cash laying around that wants to invest, has an appetite for real estate investing, and you can negotiate the terms of what it would look like to use their money on one of your projects. Pretty simple, right? And what I love about private lenders is that you yourself can negotiate the terms of this, much lower interest rates, and oftentimes you can avoid paying points and things like that, which you can't necessarily do with hard money lenders or big banks. So that's always a bonus option with private lenders. This is an option that I personally use on all my projects, and just about on every deal I leverage other people's money, OPM, to fund my deals without any of my own money invested, which I train on in more detail inside the mastermind. And why I love this strategy is because it's a win-win for them and it's a win-win for you, which should always be the goal behind everything that you do as a real estate investor, especially if you want to have longevity and build those lasting, strong bonds and relationships with the people that are going to invest in you and your business. Now you may be thinking, well, that sounds great, but I have no clue where to find a private lender. But I have to say that finding a private lender is actually much easier than you may think. Besides the different websites that are out there that help you connect with potential private lenders in your local market, I suggest starting with your own sphere of influence. Now, it does take some time and some effort to identify and build these relationships, but the great thing is they are all around you. You just need to start having the right conversations with the right people. And I bet if I were to ask you to identify a boss, a person at a local real estate investment group, an investor in your market, a family member. I mean, the list goes on. You will find someone with money in their savings account making 1% to 2% if they're lucky, who would love to invest in a safe opportunity that is secured by real estate, an actual physical asset, a tangible asset that could make them a much higher return than just sitting wherever it's currently at. And if you're thinking, okay, no, Matt, I actually don't know anybody or have anybody in my network like that, I promise you that you know someone that probably knows someone that is looking for these types of opportunities. So keep chatting about what you do. Hey, I'm a local real estate investor. This is what I'm looking for. Do you know anybody? And I promise someone will surface who's interested and has an appetite for these kind of deals. Private lenders are all around you, so always be on the lookout. You just got to be patient. The fourth most common way to fund your flip deals and investment opportunities is somewhat of a newer trend in the investment financing world, which is through online mortgage lending institutions and crowdfunding websites like realtyshares.com and lendinghome.com, which are really, just to name a few of all the ones that are available and out there now to investors like you. Now, these companies are somewhat of a hybrid of private lenders and hard money lenders, and they've really tried to simplify the lending process by automating things online. And over the last few years, this has really become a lot more popular for flippers and investors alike. So if you are looking to use a company like this to fund one of your projects coming up, I highly recommend that you do your due diligence ahead of time, because these companies have certain regulations and criteria that they need to be met in order to fund your opportunities, and you're going to want to know sooner than later. So for example, I would recommend reaching out to some of these websites and seeing and asking what is the information, the documents, or whatever it's going to be that they are going to require from you on your next opportunity. So when you actually have one in the hopper, you've already got what they need organized and lined up, so there aren't any delays in the process and you don't run the risk of losing that great opportunity. Because the last thing you're going to want is to be scrambling last minute, the deal slips in between your fingers, and it's because of any delays that you could have avoided by doing some of this legwork up front. Usually the process goes a little bit something like this. Let's say you find a deal. All you have to do is apply online, submit your deal. They'll ask you for some information regarding yourself and the deal, which you already know because you have done your due diligence ahead of time. And then they will underwrite the deal to make sure that it meets their criteria. And then usually they're going to give you a response within 24 to 48 hours of actually submitting it, saying, yes, we'll do the deal, no, we won't. So it's pretty cool. And from there, most of them can fund deals in something as little as 7 to 14 days. I've done one in 6 days. So they are very fast, very flexible, and they're great at what they do. So do a little research, start reaching out to a few to see if this is an option that would be a fit for your investing model. But overall, whether it's this funding option or one of the others that I've mentioned previously in this video, I highly suggest that you do your due diligence with each option that you're exploring before you actually need the money and the funding, so you can have all your ducks lined up in a row and avoid scrambling last minute and missing out on any potential opportunities that could change your life and or your business. Trust me, you'll be glad you did. So that wraps up the 4 most common methods for financing your flip and investment projects. But just know that there are endless ways to creatively structure funding and financing for your investment opportunities. And the better the deal is that you find, the more leverage and options you create for yourself and become available to you when you are looking for financing. So with that said, go out, find more deals, find those great deals where people are throwing money at you because of how great of an investment opportunity is, and use one of these simple strategies to fund your next investment opportunity. Hopefully that was helpful, and now that you have a little bit better of an understanding of your financing options, I hope you have more confidence that you will be able to find a way to fund all of your investment opportunities moving forward when that deal presents itself. So if you have more questions, feel free to reach out, leave a comment here on this video, and until next time, I'll see you on the flip side.